more broadly, sort of the structural reasons to be in and around commodities are still all there and still holding. So yeah, I'm not sort of sweating at the moment for us as a fund. When you long something, I feel so much more relaxed about a time frame. Like everyone's like, "Well, what's your compound annual return?" Or like, what do you expect to get when you enter investment? I truly don't give a fuck. I just think I'm buying this thing at 20 cents in the dollar. I expect to sell it at 70 or 80 cents in the dollar, leave some for the next guy. When that happens, if it's in 5 days, 5 months, or 5 fucking years, I'm kind of agnostic to that. Obviously, I would prefer the shorter timeframes, but sometimes they take time.
This is general advice, my opinions, and for entertainment purposes only. CFDs are high risk, past performance isn't reliable. I may be long or short CFDs and stocks mentioned. Content may contain language that offends some viewers. Righto, bag holders and stop loss owners. I hope you got your stop losses in at the moment, because far out, mate. We've got the bloody Cottesloe guru himself, Rusty Delroy, to come on and talk what the hell you do in potential World War III. Rusty, welcome, Cobber. Welcome to LEVRD. Great to have you on for the first time.
Good to be on, mate. Good to have a frothy, even if it's a digital one, with you. I think last time I saw you at the Money of Mine studio, I was off the sodas, so
you're
nice
back on
back.
it, mate. This is what this time does to you, mate. Rusty, you manage a bit more money than me, just a little bit. Everything we don't need to beat on about what's going on at the moment with Iran and Trump and everything, but I would like to know when these things happen, because this wouldn't be the first time you've been hit with a bit of a potential global retracement. How the hell do you get your head in the game to approach these situations as quick as you can?
Yeah, cool, mate. It really depends on your own circumstance and your own portfolio, and which sectors you're exposed to, because every event's got its own nuance. There's a great piece on Credit Voices with Jeff Curry, I think out end of last week, and the structural reasons to be in and around commodities, I don't think have dissipated. So even with all this market volatility, whether it's geopolitical tensions or I think the big one to probably watch more closely is actually these credit markets and what's happening in software, and wherever there's gearing on the assumption that there were businesses that were going to have 15-year annuity streams, and they'll be lucky to get 3 or something, then those sorts of things do sort of keep you up a little bit, but yeah, I think more broadly, sort of the structural reasons to be in and around commodities are still all there and still holding. So what have we seen in the last 12 or 18 months? Arguably, some of these sectors start to roll over that have been very fashionable for the last 10 or maybe 20 years, and like software, and where a lot of capital has arguably been positioned and still positioning in AI. But we're starting to see AI sort of cannibalize a lot of those areas. Our current view, and this is an evolving landscape, but current view is that resource producers are pretty insulated from that. If anything, it's one of the derivatives of an AI revolution that I think plays really well, because the ultimate landing place for AI and humanoid robotics is essentially just substantially cheaper, like by a long way, goods and services. And there'll be some disruption with job losses and whatever, but in that dynamic, ultimately, what does that mean? It means the consumer probably consumes more. So more consumption equals more inputs. So I guess long-winded answer, sorry, mate, but nothing to cause panic if you're really long the resources sector. It's not something our portfolio's not really skipped a beat. But I think we had last night our 5th copper company taken over in 18 months. So it's all contextual. I think when you look at these sorts of landscapes, it depends on what you go into these events with. And I could be sitting here with you in 2 or 3 weeks and look absolutely stupid having made these comments, and maybe it's all turned to custard. But yeah, I do think that longer duration view around resources, the structural pieces are generally very supportive, and so yeah, I'm not sort of sweating at the moment. For us as a fund, we have the ability to go short, but we don't. Yeah, we keep it within the mandate. I don't really enjoy it personally. It kind of keeps us up at night, even if it's a small fraction of the portfolio. So I find it much more enjoyable to back companies, buy value. If it gets cheaper, buy more. So it's a lot harder to, you get a short go against you. It's a lot harder to just double down the short. That's a infinite game.
Especially if you were short one of those copper companies that you got taken over.
Yeah, exactly. So for us, mate, we just keep it like as vanilla and simplistic as possible. And so what have we been doing? We've had very healthy returns. We're very grateful for that. Very cognizant of the tailwinds we've had with the market. Also, I think our team and our approach to tech and AI and data has been really paying dividends. And then, but simplistically for us, we just moved to cash. So we've had very good returns, and at the same time, we've progressively, as things have matured, we have progressively built a portion of cash into the portfolio. We haven't aggressively, moved to cash or anything like that. Certainly not advocating that. It's more, as things have matured and we tend to hunt, down the curve, then, you got to wait for your liquidity events and the like. And as that's happened, we've progressively built a bit of a cash position. So I think we're close to 50 million cash out of 250 million through the market at the moment. Something like that.
Ready to go shopping in a month or so, hopefully.
Yeah, maybe. We'll have distributions and stuff to make in the middle of the year. But yes is the answer. We're kind of like I said before, with the longer term structural piece, we do really like the sector. Any sort of a washout, I think, would be, I'm careful what I wish for. I'm reticent to say welcome, but if it was to occur, we certainly feel like we'd be fairly well positioned, and we certainly feel like we would welcome that opportunity to go shopping. There are clearly some pretty crazy things out there. You would have seen them in some of these sort of more niche metals, perhaps, and some of the equity performances in some of those. And can they be maintained? I think there's some risk around that, but more broadly, just continue to try and rotate and find quality. It is getting harder, as I'm sure you've found, mate, just finding value out there.
Especially at my level, mate. Bloody hell, God, learned some good lessons quickly. Unbelievable.
Mm-hmm. What specifically?
Well, probably I reckon the mistake I made about at the start of January was the opposite of what you probably did with tech. So, tech was just flying. At some point, you're like, can you backfill these valuations long term? And I'll ask you a question about those valuations in a minute with interest rates and everything, but just should have took the money off the table, like thinking we're at this point, go look at bloody coal, uranium, like things that haven't gone yet, rather than trying to still keep analysing fucking gold stocks that are reached these almighty peaks, and just got too tricky and buggered around with it. So knowing when to just take the money, which is what I did on Monday, literally sold everything for a reset for this event, instead of being wedded to what I thought I knew about something already. Let the emotion get in the way, effectively, which is what I did.
Yeah, right. Okay. Well, it's hard. It's really interesting. I love that you're sharing your journey so openly. Mad credit to that, mate, because it's not, it's a bit like being an artist and having a permanent exhibition on. Everyone's seeing all your stuff, for judgment. And that's not an easy thing to do. So that's a real credit to you to share that. And particularly when you're doing something that is ostensibly sort of new, running capital, running a PA book, or, being in and around capital markets, whether that's on the sell side or whatever, it's all different to running a proper, in your case, long short sort of fund, or however you want to sort of frame it. But the psychology is easily the hardest part of the game. And I don't know anybody that wouldn't say, it took me time to adjust when I first entered the market, or I came to the buy side, or whatever. It just does. I've seen lots of guys who went from the sell side, really good analysts, then really sort of struggle with the psychology of the buy side, because it's fucking merciless. It's like daily you're told if you're wrong or right, and whether you're wrong or right is like really not that easy to answer, because I had an example. Our oil and gas guy had a play where we'd been there for a while. We bought it sub cash. They then had an asset that they wanted to advance. We went and did a lot of technical work on it, and in the end, we just couldn't wrap our heads around it. And so we exited on a bit of interest in the story, and then I think it did like 5x from there. And so internally, our guy was like, "Oh, like, I'm really sorry, I've got this wrong." It's like, well, the screen says you've got it wrong, but what is it that actually has occurred? And, he explain it and say, well, there's still dewatering. And so none of the things all the reasons I didn't like it, none of it has been disproven. And in the end, he was right. But for a period, he looked wrong. So, like, which is it? Are you wrong? Are you right? It's very hard. All of these things, any answer is contextual time. And so, we just try and stick to our knitting, stick to our disciplines, try and make sure that we're doing good due diligence, and that we truly believe in something for a journey, in the vast majority of our investments. And that's held us in good stead through a whole range of different markets. I think the fund is nearly, it's coming up close to its 15th year or something. So,
yeah, wow.
Yeah, I know. Happened quick. Got old fast.
Yeah, very much so. Well, that's it's interesting you say that about just timing. Like, I'll use an example. One of the stocks I'm short at the moment, Bellevue. I believe I am right about an outcome there, but it might take 6 months for that to happen for a downgrade, if it happens, because nothing's definite. But with my view and everything, but it could go up, gold could rip then, and it could go up 50%, and I bloody look like a friggin' idiot. As long as I got more longs on the other side, it doesn't really matter. But when you say timing, and I do find myself getting wedded to views too much and not being able to let them go, which is what they probably think of me too.
No, mate. This is the hardest part about shorting, is that it's not sort of time frame agnostic. When you long something, I feel so much more relaxed about a time frame. Like, everyone's like, well, what's your compound annual return? Or like what do you expect to get when you enter investment? I truly don't give a fuck. I just think I'm buying this thing at 20 cents in the dollar. I expect to sell it at 70 or 80 cents in the dollar, leave some for the next guy. When that happens, if it's in 5 days, 5 months, or 5 fucking years, I'm kind of agnostic to that. Obviously, I would prefer the shorter timeframes, but sometimes they take time. With the short side, it's a lot harder to be like super relaxed. We were short IGO, I think, at 16, 17 bucks with conviction, around that asset. The asset mix, they're having some serious issues, and it ran to 23, 24 bucks, and we ended up pulling it. Like, this is just not worth the sweat, and then the thing got monstered. So, timing is really, really hard. And I would say the short side is just infinitely harder than going long. Something that you believe in, that you're long, if it goes in halves, well, you can comfortably just say, I'm going to go recheck all my work. I'm going to go like, I can double check it, triple check it, and retest all the reasons I'm there. And if I'm still high conviction, well, I'm going to support the next cap raise, or I'm going to double down here and step into the screen and, work with management to stop costs bleeding out whilst this market's shitty, or whatever the case may be. You can far more sort of dig in and get in the trenches. Whereas if you're like on the short side and it's just ripping your fucking face off, mate, you're a more stoic individual than me, Matty, because certainly not in my DNA. We've struggled with it. So very unique circumstances that will go short.
And you can imagine the stress I was under. So I had about 250 in play, 1,000 obviously, but of my own cash, but leveraged with about 1.2 million total in play. So a fucking 10% swing gets my positions cut. Yeah. So I had no room for error, hence why I ended up in the position I did. Well, I ended up back where I started, which was a miracle. I could have blown it all up and it would have been the shortest show in history. Oh, it was hilarious. Anyway, lessons learned.
So where are you at today? You've unwound all the longs and all the shorts, or give me a rundown, and apologies for not being notified.
That's all right. Sold everything market open Monday because everything went up mostly, all the golds and all the gold longs and everything. I think lithium was pretty flat. I had a couple of lithium positions. I think I had a short on Bellevue. I got a big short on the NASDAQ. And so I effectively, with all the uncertainty and thinking, okay, everyone's going to be going towards precious metals, you would think. Didn't touch oil because it already sort of went. Everyone's going towards precious metals, but I'm like, well, that might be the case, but if this thing keeps going, and this is like the most intense thing I've ever seen in my life of what's happening at the moment. I'm like, even if the metals go up, who is actually going to want to own stocks? So pretty much transition to long the metal, short the equities. So long gold metal, short gold equities, and just opened up a long copper metal and shorter copper equity today, because I think obviously if copper goes back to $5 a pound, which is what a 15% retracement on copper, that's what, 25% off the equity, you would assume. I've got a bit more positioned in the copper. So that should see me and then obviously the NASDAQ, and it's probably been reconfirmed a bit today because you're obviously out of it, even though it's not ASX related. I'm like, what's the most logical, the best hedge I could use against all my longs? Obviously the most volatile that's topped out, and the NASDAQ was sort of screaming at it.
Yep.
And then with all the CapEx, increased CapEx is on the earnings, and then look, even Nvidia bloody beat earnings and then got hammered a day later, like on good earnings, and it seems like the earnings are there, but it seems like the market's thinking they're a bit riskier in the future. So it looks like maybe the tech multiples are going to be decreasing, and then it looks like on the back of what's going on in Iran at the moment, the interest rates the next interest rate cut could be potentially September in the US, or even not at all. So if you keep interest rates high, so that's going to affect the multiple that these tech companies trade on. So it just seems like the money just doesn't want to be there in tech. You look at the chart, it's flattened out in the NASDAQ. It just wants to go down, and it needs to go down for me, effectively.
I let you whisper those tea leaves, mate. They're way past my pay grade. But I mean, look, you'll get no argument from mine, simplistically. It's not something I'm like super au fait with, other than I follow the technology closely, and the rollout of it. But I'm less on top of, what something's worth in the sector. I don't profess to understand that well enough.
Neither do I. I just heard it on Bloomberg. I'm just going off what Bloomberg told me.
Yeah, and it looks, whenever I read something written by someone else who does sort of know what they're talking about, yeah, it does look hard to justify these valuations. And there is a lot of sort of circularity to the whole, flow of capital in the sector and who's booking what earnings and where that money came from and all the rest of it. So, yeah, I mean, I don't reckon you get too many people arguing that the return on capital invested in AI, it's so hard to see how all these guys make quality returns when the flood of capital is so large all at once. They're all almost sort of fighting for survival in my mind, as the tech oligarchs that there have been for 10 or 20 years. And let's face it, that's what they are. I feel like they're kind of all aware that if they don't play, then, they get erased. So to me, it's like a survival mode move as opposed to, hey, there's this enormous return on capital to come for all the capital they put in work. That's just me, reading other stuff and a bit of guesswork. I don't profess to have any true understanding of that sector beyond what I just expressed. And and so, yeah, I mean, we're certainly seeing the impact of AI. I feel like it's funny, like resources in many ways are like the picks and shovels of AI. AI absolutely fundamentally needs energy to work. Like AI just doesn't happen without the energy input. So there's that component. And then on the backside of assuming that gets solved, on the backside of AI working, like I said before, if it does, radically decrease the cost of goods and services, i.e. it brings enormous productivity dividends to the sort of the broader economic landscape across the world all at once, then that has to, I can't see how that doesn't translate to more consumption on a sort of global per capita basis. And so in that landscape, we're all consuming more, and that means just more, more resources have got to come out of the ground. Now, the interesting part with resources because they're non-digital and they're non-knowledge, right? Bearing in mind, right, AI is literally putting knowledge to the sword. So if you are in a knowledge business, and arguably funds management is a bit of a knowledge business, but if you are in a knowledge business, you are getting put to the sword. They are taking the value of knowledge to zero. That is psychotic. That is the biggest event in human history. We have AI, in my mind, and I think I said this before when I've talked to you about it, is the single biggest evolutionary event in human history. It is so inconceivably radical to our entire definition of what it means to be human, for where our species is at in many, many regards. And it is going to just fundamentally change what it means to exist as a human being.
Yeah,
and
I didn't
passionately believe that.
I didn't know which way this convo. Before we get to commodities, I'll just expand on that. How do you think the markets are going to trade in future when every Tom, Dick, and Harry is using, say, Claude AI to simulate what a quant or a hedge fund is doing, and everyone starts trading the same way, and it's so much more active? Where does the edge come from? I'm sure you've thought about that.
Yeah, well, I love it, right? In theory, it should be a better performing market. It should be closer to efficient market sort of theory, right? Like that whole hypothesis. I've always struggled with it, but this, in theory, should bring us closer. In essence, it should be a greater percentage of the capital that is invested is being done so with incredible intelligence and unemotively, right? And that's a huge part of like the investment landscape, the governance landscape. Applying AI to governance, whether that's corporate governance or government governance. There are so many ways we can do things better. Misaligned interests, which I know I've talked to you about previously, all of that can be radically adjusted with the use of AI. It is objective, right? So that I'm actually really, I'm bullish about. I love that. What does it mean for like us as an industry? Who's going to get chewed up first? I think like if you're not running capital and utilizing AI and thinking about how it is implemented across every part of your investment sort of process at the moment, then I think you're going to have problems in it 12, 18, 24 months. I genuinely think that. What I love about our sector, and this is perhaps, rose tinted glasses, but our sector is very niche, right? You know this well. There's a lot to it. There's the spreadsheet, and then there's a whole lot more than that. The people, the skills, delineating ore bodies, finding ore bodies, they're very different to actually mining them. And then there is the inherent volatility in currencies, in commodities. So by and large, it's a very nuanced, very tricky space. It doesn't mean AI isn't dissecting it. We're using AI right now. It's doing a phenomenal job getting us far quicker toward, more accurate, far quicker answers than we would have done so ourselves. It's a shortcut, right? And so it is having an impact. It is active in our sector, but I do think our sector is one of the last ones perhaps to get like fully disrupted, because it is quite nuanced and it is more complicated and volatile. It doesn't mean it's not coming for it. The general flood of capital into AI around finance is significant. Does it worry me, or do I stress about our business model? Not really. I guess I'll be more worried if I feel like it's just inherently harder to find the bargains. If it starts getting really busy. Yeah, exactly. It's whether it closes the gap down the curve. Already up the curve, your opportunity for gaps is narrower, right? Like you're waiting for big events to generally sway prices away from something fair and reasonable, or in for instance in oil and gas, like some sort of artificial overlay, like ESG driven investment dynamics. And without those, then generally things trade arguably pretty fairly. In the small caps, we all know there could be myriad of reasons that a stock's uncovered and unloved and capped at nothing, even if it's got a really compelling ore body or set of ore bodies or projects. So I think if we start seeing a landscape where it's harder and harder to find those, probably, I guess I'd sweat a bit more. I don't know. I don't feel threatened by it at the moment. It is inherently making us far better at what we do. And if it makes capital more efficient, like at an ethos level, fuck, I'd welcome that. Just less capital getting sprayed in dumb places. You will have seen it many, many times in bull markets. How many companies with projects that probably shouldn't get capital, and if it means capital is allocated more efficiently, well, I'm all for that. That's a good thing for the sector. It's a good thing for the planet. At the moment, I certainly feel like it makes us just far better at what we do. I don't feel inherently threatened by it, but I mean, fuck, honestly, that landscape is shifting so rapidly. Just look at the models that have come out in Jan and Feb, what they can do versus what a generic LLM could do for you. Never mind having a full, CTO in your organization and an engineered sort of work stream of data and integrated LLMs. Never mind any of that sophistication, just a vanilla generic LLM and just plugging in, just semi-well considered prompts. It's just to see it interact with you, how it is thinking it's a quantum past where it was a year ago. And it will tease it out of you now in an interface. And I actually think, mate, we'll just sit down verbally with these things. I don't think that's far away. It'll be completely plugged in. We'll all learn to let go of control, and you'll fully plug it in, and you'll literally just have verbal interfaces and, hey, okay, this is what I want to do. Run me that up. All right, cool. Let's tweak this, and this, please. Come back to me when that's done. I think it's going to be phenomenal.
I'll be interviewing computers soon, probably. I'll just have an AI bot on the other side, and it'll be asking me questions.
Maybe you already are, mate.
Yeah, maybe. If there's any, if there's any example of a potentially living one, I'm talking to it right now. Mate, how do you?
It's a bold new world, right? And you can sort of ponder around and be like, oh, do I like this? Do I not like this? This is a good thing about it. It just is. It's just a thing, and it's here, and there's no turning it off now. So might as well just embrace it, get used to it. And, it's an interesting thing to think about. I think it's going to do all these remarkable things for us, and then it's going to free us up. It's like, what a fucking gift. We can go spend more time in nature, go spend more time, out in the big, beautiful world, and hopefully not have to sweat the small stuff so much, not have to sweat the grind. I don't know. That's what I'm hopeful for.
Boy, it sounds very promising. Mate.
I hope so, mate. Hopefully it doesn't kill us all.
Oh, yeah. Oh, anyway, you won't. That won't be your problem. You'll be dead. Mate, how do you... I want to get an insight into your psychology, how you approach things. Let's say the start of yesterday morning with everything that's going on. And we'll start with oil. Oil was up 10% or something. There's so much uncertainty, and everyone's like, put your money in oil, bloody oil's going to go up. There's so much uncertainty. The Strait of bloody Hormuz could be bloody reopened tomorrow. Like, who knows? You've been punting the markets for years. When these things have a spike, you think, oh, logically they could keep going, but they could keep down. And you strike me as someone that likes getting in before events happened and being positioned.
Yeah.
Like, do you ever entertain the thought with these things? Let's use oil as an example for this one, and natural gas.
It's a great question, mate. I think, as you alluded to, our bias is to sort of zig when others are zagging. So, we're usually sort of hunting these things in a perfect world. Like, we love the idea of oil being $50 handle, right? Because we don't think it can remain there. So we're very cost curve driven. And ultimately, like, if you want to identify God in commodities, to us, the cost curve is God. Everything reverts to it at some point. It's very rare that a commodity will persistently trade at some distal point from the marginal cost of production, whether that's like above it or below it. And ultimately, those things cure themselves. So, the cost curve is super important to us. We like to, like I said, see what others are zagging. So ultimately, it's like, when you go long, we like looking at commodities when they're trading into cost curves and everyone hates them. That's typically our bread and butter. To like an event like the one that you just sort of talked to, if the view is like, okay, something very meaningful just changed structural dynamics, like in this case, fundamental supply side dynamics, then, maybe you would adjust your view. And if it adjusted the cost curve, then structurally, not just temporarily, then I think, you would revisit whether or not you want to be taking on positions in the sector. In terms of the specifics of the events over the weekend and, Iran, the Strait of Hormuz and the like, again, we revert to people who truly know and understand the space far better than us. Our current sort of, I guess, pulling all those threads together from different groups, our current internal view is probabilistically, this is almost one of the best, like right now, it looks like one of the best possible results for any invasion into Iran. So, any spike in gold or oil or sort of, let's call it risk premiums, I think you're kind of fading that at the moment. I'm certainly not chasing that trade with like conviction that this is a fundamental structural change and that there's like all hell breaking loose now in the Middle East. I think when Russia invaded Ukraine, that was different. That you could argue, okay, this is a big, this is a meaningful shift. Europe's going to act. There's going to be a lot of repercussion here. I don't think we're going to see that in the Middle East. It's fascinating the the groups that Iran has actually targeted, the groups that are now, Western aligned, I think a decade ago you would never have imagined that would be the case, right? So in many ways, it's been a very difficult period to watch what's gone on in with regards to Israel, Iran, Palestine, and the like. Whatever your view is, I don't think it's possible to argue that the region itself appears to be heading towards a more stable foundation than perhaps where it was a decade ago. I know it's weird; it doesn't maybe feel exactly like that, but I think once you really pull it apart, it's like this is no longer a hotbed of hatred towards the West. It only takes one trip to Dubai or Abu Dhabi or whatever, and these are sophisticated civilizations. They're living very modern existences. There's a lot of capital at work. There's a lot of people who like just general freedoms. Now, does that mean that all of those places are operating as open a democracy and the like as we'd all like them to, as participants in democracies? Probably not. But contextual to where those places have been, I think the general trend is pretty good. So I'm not a believer that this is like all hell breaking loose. I think this is actually pretty low key for what's going on. They just fucking invaded Iran and unalived 40 of the key guys. So, I mean, in the past, you would have been like, holy shit, what, are there nukes coming across the borders? And
well, that's
so,
nice.
so I maybe I don't know, mate. Only time will tell. But it's been very interesting to watch the US this White House and how they're approaching these sorts of things. Clearly, I think whatever you do, just try and look at these things in the lens of US v China. That is the only real lens to try and conceptualize just about everything in our view. That is the true dynamic that's at play here. This move from a hegemony to a multipolar dynamic. And, let's look at like Venezuela and Iran. These were all sanctioned jurisdictions feeding, these are all providers of inputs to the machine in China at substantially below market rates because China will take their embargoed sort of products. The US is sort of making it clear, well, nah, fuck that. So, they're using the sniper, not the shotgun. It's not costing them American lives in any sort of, large or, meaningful quantity at the moment, which, any life is terrible. But, this is a far cry from like an invasion of a country, boots on the ground, Iraq and those things. This is just a very different approach. And whether or not it works, only time will tell. But I think these are like sniper moves, warning signs to other operators who might work against US interests, and to say, hey, no one's safe. We can come for you. And that's a very powerful message. And equally, perhaps one of the hardest things to wrap the noodle around is like, equally, they're kind of like, hey, we're asking for evolution, not revolution. And if you look at like Venezuela at the moment, they haven't gone and installed the great sort of, democratic solution that you might expect. They've sort of gone, oh, well, next tier down, you guys just behave a bit better, set the direction a bit better.
What about the Goldies, mate? I don't know if you're playing up the curve at the moment in the bigger stuff, but like if there's, I guess we've seen today, which was interesting with the copper and gold. You saw that risk-off sentiment come in, like the gold and copper weren't dropping. Well, gold's just actually dropped a shitload after market back in the 5200s, but you just saw the equities really dropping even when the gold price was rising. And if there is, do you still see a bit of value in some of these developers that might be waiting on an FID or a funding and to potentially re-rate to become a producer, and that could be some shopping coming up for you?
Yep. Yeah, definitely, mate. So, we've been doing a lot of work through Canadian markets in that regard. in the gold sector, and also domestically on the ASX, things like Brightstar. Really like what Alex is doing there. Yeah, lots of hard work still to pull together, but companies like that don't have overly aggressive market capitalizations, meaningful asset bases on a sort of 2 to 3 year view, and then well funded. So credit to Alex and the team. They're taking on a big lift of capital. Go do the job properly. I think that's perhaps the biggest difference with this market at the moment is there is access to really good capital for a lot of those companies. So yes, we're absolutely still hunting and looking at those sorts of plays. It's not to say that they're easy to find, but yeah, they're definitely out there.
Yeah, that was my core holding till Monday when I dumped everything, or dumped it at a profit. But yeah, I concur with your comments there. So I'll be having a little shop there as well. So it's but that's
or maybe you get an opportunity to buy that.
Let's friggin' hope. What do you think about the world of nuclear and uranium? And that's probably the one thing that could be tied to tech at the moment that seems to move with tech is uranium. The narrative, I guess, has never been stronger, even though the equities have done extremely well. People that say they haven't made money out of uranium, I don't know what they've been investing in based on the performance. Are you tying that into your belief about tech and everything and the power that's going to be required, or run its race for you at the moment?
Yeah. So you could very easily conceptualize a scenario where AI blows up a whole bunch of sectors like software. AI investment itself blows up in many regards because this huge quantum, it just doesn't get the return on capital that it should have got. You could have both those things happen and still precipitate an AI revolution more broadly, which would, by definition, require a whole heap more energy to feed it. So even with those two things occurring simultaneously, which would invariably be no doubt negative for the broader S&P or NASDAQ or whatever key index you're looking at, all of those things could very easily occur, and you would still need more energy to feed all of that, a lot more energy. So, we're certainly very happy to remain sort of long energy in general. I think in the nearer term, you really have to look at gas, I think, as a more likely solve for energy demand. It's jurisdictionally sort of nuanced, but gas to us is far more likely to play a big role on a 5 to 10 year view. Uranium is really, really interesting. We are believers in it being a core part of the energy mix long term, but there just are fundamental constraints to rolling, reactor builds out in various jurisdictions because of the regulatory environments and stuff. So, we're still very constructive in the space. We still own names like Kazatomprom and things like that. But being too evangelical about it or punting, too hard in the sector, it's not something we're doing at the moment. On any pullback, we'd happily own next gen at the right price, but not here.
How do you view your Kazatomprom holding with the potential risk of them nationalising? Do you take that into consideration much, or you think that's why it's valued the way it is as the biggest producer?
Yeah. I mean, I don't profess to have any better intelligence than what is sort of broadly out there. I don't think that's probable at this stage. It's not to say it's not possible. It's to say it's lower than 50% probability. It's not probable. So, that's our current view. And I think the stock trades as if it's kind of probable. Like it's wild that the world's largest producer at the lowest quartile cost trade at a material discount to all of the peers, thereafter in the food chain. That's very unusual to see that. So, you only need to look at the next peer down the food chain in Cameco, and yes, you can say it's more vertically integrated or whatever, but the multiples are just psychotically different. So we'll kind of happily take that risk return. It's a well-run business. I don't see at the moment, it's hard to see like what would motivate that kind of a move from because it would make it uninvestable. It'd ruin the joint for 10 or 20 years. And I just don't think that's all that desirable. So, maybe we'll be proven wrong. I think the other possibility is that, at some point Russia and Ukraine does resolve, and in that event, I think you get a significant re-rate on this thing. So at the moment, it trades like a sort of proxy to that whole dynamic. And I think if that was to resolve, then you'll get a 30 to 50% re-rate in this business without much else going right. So, and in the interim, you get paid a dividend and all the rest of it. So yeah, we're very comfortable there, and it's not a percentage wise in the portfolio. No, it's not like it's 10% of the fund or something like that. So,
yeah. Somewhere that's not Middle East or Western, you'd say. I don't even know what it's classed as. India. We had a DK from bloody the Langers and Bondi's voice that they send out to podcasts. He come on to and they look like they're so paying a lot of attention to India at the moment, especially with like met coal, manganese, aluminium, and things like that. And that's, could potentially be. And we just saw him ink a deal with Cameco last night, I think, or 2 nights ago for £22 million. So they're getting very active in the market with, trying to China themselves up in a way. What do you think about that as a joint and what's going to benefit?
Yeah, I mean, I'd certainly leave it to the guys to talk more directly to the specifics. Fundamentally, it's the best demographics in sort of Southeast Asia. It's in terms of the highest percentage of sort of working age population, they're typically reasonably well educated and increasingly so, and so, I think fundamentally India should continue to grow. The policy settings of Modi have been pretty productive to date. I think jurisdictions like India, Indonesia, these are places that are growing. And the entire sort of dynamic around demand for commodities in our region is incredibly positive, I think, on a longer term view. There's still an inordinate number of people, arguably bigger than the number that China have pulled out of poverty, still to be pulled out of poverty in this neck of the woods. Now, it's going to be perhaps less predictable and the like, because it's not one country and one, centralized governance framework. But I don't disagree that these places are playing increasingly large roles in commodity markets, and that, as a jurisdiction, India, has stated objectives around steel production and the like. And I think that they will likely get there. And they're short inputs. So, you overlay that with China and its awareness of being squeezed on inputs and clearly sort of building stockpiles. The US and its awareness now of being squeezed on, this whole deglobalization that's occurring and is kind of in full flight. And, the Europeans still to do anything as usual, fucking useless. The dynamics for commodities, I think there's, it's layered. There's multiple layers of reasons to stay long the sector. It's an under-owned asset class. It's a hard asset. Any fiat debasement plays well. Energy into AI, all of those things. And as we said, AI reducing the cost of goods and services and ultimately driving more consumption. There's so many layers to want to stay long the sector. Yeah, I mean, as you sort of alluded to, copper could roll off 15%, 10, 15%, and proper equities could easily be off 30, 40%. So, we have had a good 12 months. It has been a big run. There are, bigger assumptions now built into these market capitalizations around, commodity pricing. So I'm in no way bearish, but I am aware that it's very rare that things straight line in one direction. And so, I would expect the pendulum to swing at some point. Whatever drives that, I think it's somewhat unpredictable. I mean, who would have thought 0.15 percentage point move in Japanese fucking cost of capital, a year ago would drive a 10% sell off in global equity markets? Like, it's hard to know what is the trigger. I think you can just, it's eminently sensible to just prep with a bit of cash at the moment and still be constructive, still be hunting, still be recycling your capital, still be taking on new things, as you said, that are down the curve or interesting quality discoveries or, deep value things that have perhaps been missed or have brownfields leverage. I think all of that still makes sense, but yeah, yeah, some balance required, and worst case scenario, end up with a chunk of cash.
Yeah, fucking oath. Right, last question, mate. You were beating the drum about nickel industries for a while. We've seen a lot of activity in the nickel with Indonesia at the moment with the production cuts, trying to lift the price up. I know, like, a lot of your comments were around the narrative of laterites being horrible for the environment, but there was companies like Nickel Industries that do it very bloody well. What's your view on Indonesian and then global nickel at the moment on the back of all the recent stuff?
Still very much like that business. Some increased volatility out of Indonesia in regards to permitting and the like at the minute. But I do think business like Nickel Industries is well positioned. They meet very high standards. Still a quality business. I think some more volatility in that Indonesian dynamic, but we're not evangelical nickel by any stretch. Our view is they're sort of at $7 or less. Production gets curtailed or investment gets curtailed. At $9 or more, investment's incentivized. So this is a pound nickel. So we think that's a quality business. It's not priced too aggressively, and in a 12 months time, that I think their balance sheet should look quite a bit better. So we still like the space. It's had a good re-rate. We're not like mega in terms of the percentage of the fund that's allocated to the sector, but yeah, we like sort of coming in and out and I mean, long term, world still needs plenty of nickel. These guys produce it more efficiently every time they roll out a new unit in Tsingshan, and it's the best feedstock on the planet. The Indonesian laterites and IC have put their foot on a really good quantum of laterite supply. So yeah, we still like it, man.
Very good. Oh, bloody, here's where we can finish off with. I'll show you the holdings at the moment. This will be funny.
All right, yeah.
This will be funny. You can see how how mad my life has become.
Does that ticker with your P&L just constantly going up and down give you anxiety?
Oh, shocking. Can you bloody...
That's hectic.
I'll see.
Dude, that's like sitting at the fucking pokey machine and...
I know, it's like PTSD.
Pinging you all day.
PTSD big time. Here we go.
Do you want to know how many times I look at my folio in a day?
How many?
Very fucking few, mate. My guys are there, so it's not to say I'm not, we're not across it. But me personally, there's sometimes 2, 3 days, I don't even look at my portfolio.
Oh, wow. Yeah,
So,
no, I'm not in that habit yet. I'm like a meth head. I'm just watching it all the fucking time.
got ya.
Right, check this out.
Got ya.
1.2
Okay.
million short of the NASDAQ. It's just started dropping. It's just started dying, actually. Down to it. Futures are down 2.5%. Bloody long me gold and copper metal.
$1.2 million short. Yeah, wow.
On the NASDAQ. Okay. So I'm pretty fucking, if that goes up, back up to 26,000, I'm completely fucked. So
right,
we're banking on that. And then we've got
ballsy.
So then 262 short of long of gold metal, and then 145 of Bellevue and Capricorn short. So that gold's just dropped 1 and a bit % since bloody close.
Well, you're making lots of friends here. Short Bellevue, short Billy, short.
Yeah, only because
you won't be getting too many Christmas cards, mate.
Only because Develop's been on a run, and it got 33 mils of rain at Woodlawn yesterday. I got on my little weather tracker, and it just drops in and out of that $5 and $4, and not really a view on the stock, more just that the risk off on the market today, and the fact that I think that equities are going to underperform the metal in this market. So nothing personal, Mr. Clark and Mr. Beeman. Love yous both.
Okay. And presumably you're long Delta because it's like a negative EV.
Yeah. Well, that's the one. That's the one I didn't close. So it was like, fucking God, it's even more of a negative EV now. So it's effectively a gold long with Ballard and lithium's at 2400, SPOD's at 2400. So I'm like, I was going to add to it anyway, so I didn't close it. But that list was bloody fucking huge. It was on Monday before it closed. There was Brightstar, Gorilla, Torque, Centaurus, bloody fucking, PMET, bloody, it was Cameco, Paladin. Like there was everything going on. But so that's where we're at. So
nothing wrong with it. Nothing wrong with a spring clean. Just mentally, just an opportunity to reset and take a breath and feel your way through a moment, particularly if it's unsettling. Like we were talking about at the start, this game is very psychological. So really just finding your own rhythm and your own flow and your own way of doing things. It is a feel as much as it is a hard mathematical sort of science. So, there's as much Marbo in the vibe about it as there is fucking spreadsheets. They're both important. And I think, it doesn't hurt every now and again to just go, fuck this. I'm just going to reset and I'm going to have a breath and I'm going to take some time here. I'm not going to have 20 different things on my screen. So, mate, that makes enormous amount of sense. I mean, there's a big bet on tech rolling over.
Specifically tonight.
I don't think I'll give you... Yeah, well, okay. Day trading's not really my thing.
Oh, not really tonight. It'd just be nice if it happened tonight.
Well, you can take it off and sweat a lot less.
Yeah.
So, I don't know how you're getting any sleep, mate. That's so good.
There's a bit of choking the chicken going on, but anyway.
That and a few Valiums and you're done.
Sweet as, Rusty. Thanks for coming on, mate. And buddy, I'll like the way it went with the AI insight and how God. That one thing I'm looking at too. It's it kicked me in the gear. I got an AI meeting tomorrow actually, because if I need it more than anyone.
No, mate, it can help us all. And like I said, really well done on getting out there and really sticking your neck out there and doing this publicly. This is a hard enough task as it is doing it, privately and dealing with it, let alone out there for everyone to see it. So, well done, mate. Well done on having a crack. Well done on doing it in front of everybody. Yeah. I think that's to be admired. And I'm sure you'll get there, mate. You just got to, just keep feeling your rhythm and your flow and finding where you feel you've got an edge or an advantage. And or even just a degree of comfort where you feel conviction. Maybe that's a better.
Mate, I'm just proud I haven't lost it all in 3 months. I can't believe it. I'm stoked.
Well
Leveraged. Everyone's like, no, this CFD account's not going to work. I'm like, I will show you. Hopefully. Nearly did.
Sick.
Right,
Awesome,
bros. Thanks, mate. We'll have a frothy soon.
Legend. I'd love that. See you, bloke.
See you, mate.